is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at technical charts and we try to understand what happened in the market over the previous week and then also plan for a better trade for a week that's starting tomorrow, March 10th, Monday 2025. So lots of things, indexes, options, stocks, and more analysis. And the market overview is ahead. Let's deep dive. So here we go. This is a weekly view of Nifty and a daily view on the right side. You can see that it's in a trend line channel. I just hit the bottom of that, and then there is another parallel trend line channel, and market seems to have not gone to the bottom of the channel, but somewhere in the midway it has taken a reversal, and that is continuing for the last 3 or 4 days. And Bank Nifty is more or less the same in the weekly with an ascending wedge, and it has reached the bottom. It in fact made a new low, but did not dip too much, and daily view is showing that it's in a parallel channel after breaching the main channel. It is consolidating within another small parallel channel. So that's a view. So what exactly happened? It's nearly 2%, 431% of positivity of the market attempted to recover, making the correction to almost 16.4%. Remember, that's after a 72% of bull rally that's happened from 2022 June onwards. Bank Nifty also did attempt a recovery the previous week, but it had closed flat positive, just 156 points, 0.32%. And both indices are below the 20 exponential moving average, and the banks of Bank Nifty it's only a correction of 12.2% nearly. That has happened last week. It just reached the previous low, but just by a few points, of 34 points, that's all. So overall, that's the whole picture, right? The market has attempted a recovery, and so that's what you see here. If you see the candlesticks of the weekly, we see that the full body of the candle is still within the previous week's big bear downfall, right? It's a green bullish candle that we have for the weekly, but it still did not manage to close above the previous candle, and the gap there at the 22,730 still remains there. The window gap that has formed after the previous week's fall happened. So it's some kind of consolidation is triggered. It's a bullish move, it's a good recovery attempt, and substantial recovery has happened, but still there is no confirmation that the market has found its bottom at the 22,000 nearby zones. And on the right side, Bank Nifty is showing a totally different picture. It did recover. The wick sizes, look at that. That's the kind of volatile moves that happened in the Bank Nifty. It did make a new swing low, just like the Nifty, but not too big of a swing low, right? And it is closed indecisive with a dodgy formation. So an indecisive candle on the Bank Nifty with a flattish close, while Nifty a solid recovery, but still not reached the gap down, the gap that is there while slided down in the earlier week. And daily charts shows the 5 days of action. You can see that Monday had made a new dip, and Tuesday also made a new low. And then it was a tremendous recovery attempt of 4 days, when Nifty moved from nearly 22,000 to 22,600 nearby, right? So that's good 600 points nearly recovery, and that's the attempt that we're talking about. And the candlestick on the last day of the Friday is more or less like a small body indecisive, not very great, but still bullish in the sense it's a green candle. And Bank Nifty's candlestick for the 5 days action, if you see that, you can see that it's indecisive small body again on the Friday. But the recovery attempt of the 4 days can be seen, right, where it attempted to move from the 48,000 levels towards the 48,800 levels. So not as good a recovery attempt like in Nifty, but definitely an attempt can be seen in the Bank Nifty. Also the candlestick patterns as such, on the short term it's small body, it's kind of indecisive, and in the medium term Bank Nifty definitely indecisive, while Nifty showing some kind of good recovery attempt with a solid body, but inside the previous candle. So it's more of consolidation with no confirmation yet on having found the recovery. So it is for the next week that it would come into picture as to this would sustain or not. Now looking at the Bollinger Bands on the daily of the Nifty and the Bank Nifty, you can see that there is no longer an expansion either on the upside or downside. So it is consolidation, it's contraction that can be seen on both indices, but it's bearish bias because it's below the 20 moving average. Right? So Bollinger Band showing consolidation of sideways movement in the daily charts. Now, if we try to understand the momentum, we clearly see an attempt to recover. So it has climbed back. We can see the left side Nifty and the Bank Nifty is weekly, right side Nifty and the Bank Nifty daily. Momentum RSI is what is used. So there is definitely a climb back attempt that has happened in the case of all the indices except the medium term Nifties need little more to climb back in the sideways. So overall, we can say it's a step towards a sideways momentum from the bearish momentum where it had slipped. But not a confirmation yet unless the momentum sustains above that in the next week as well. Daily charts are clear. The short-term charts, it shows a clear attempt of climb back in the sideways on both the indexes. Sideways momentum, attempt to climb in the sideways momentum for the Nifty 50 medium term also. Sideways momentum in general, you can say, is what RSI is talking about, considering 40 as a support and 60 as a moment in upside limits. Bullish limits and bearish limits are what I talk about. Now for the trend indication, we are using the ADX. The ADX is continuing to be bearish. Although there is a rising ADX that can be seen in the medium term charts of the Nifty and Bank Nifty. So trend remains bearish. Momentum attempting to climb into the sideways zones, not the bull zones. From the bear zones to the bull zones. From the bear zones to the sideways zones. I'm sorry, again. So sideways is what is attempting to respect the momentum. But the trend is to pick up. Now, India VIX is the fear and greed indicator, the volatility index, or what I call it, has not spiked up when the market had slid down. In fact, it did cool off, because of the last 4 days moves of Nifty to recover. So it's cooled off to 13.4, so it's in the long volatility. Now, open interest analysis for the futures is showing a long build-up, but in the Bank Nifty in the Friday it was a short build-up, so that's only contradiction. Otherwise, the options open interest for the next weekly expiry of March 13th for the Nifty and the Bank Nifty both are showing bullishness. So that is open interest showing bullishness is positive. Now here is the open interest based levels for the support and resistance for the March 13th weekly expiry. The Bank Nifty is March 27th monthly expiry. You can see that the highest put call ratio is at 22,300 and 23,100. That's quite a wide range where the put and call is there. Second highest put and call is the 22,000 and 22,800. 48,000 and 50,000 is the range that you can see for the Bank Nifty, where the highest put and call rate is there. 47,000 is where the highest put and call is seen in second level. So that's one way of finding support resistance. Another way would be to look at the technical charts and the triangle resistance. So there's a bit of gap at 22,700 there. 720 has got a bit of gap. It is in confluence with the 20 exponential moving average. So clearing that and staying above the 22,750 will be crucial. So that's first resistance will be. And Fibonacci 61 level at 23,154 comes into play after that, and Fibonacci and the 50 exponential moving average also be very close to that. So 23,150 is going to be very crucial, closing above that. So that's going to be the major second resistance zone, and after that you have the 200 exponential moving average and 100 exponential moving average that's coming very close to the 23,600 nearby zones. 23,587 is 200 exponential moving average, and 23,497 is where the 100 exponential moving average. Then Fibonacci 50 is there, 23,750. That's the resistance on the upside. Downside, previous low now is 21,964. So 20,000 is going to be the major support. After that, 21,792 is the previous low, then 21,710, and then likewise on the downside. Similarly, Bank Nifty, the resistance would be the first one would be the 48,858. Then Fibonacci retracement 49,286. Before that, 49 rounding number is a big resistance, and then 49,490 is 50 exponential moving average. 49,650 basically. Yeah, that's where the previous resistance also comes. It's 49,650. After that, 50,000. Major resistance at 50,000 and 50,100, 200 range where the 100 and 200 exponential moving average and Fibonacci 50 and the previous, all those things are confluencing at that zone. So 50,000 to 200 and 87 is the point. Close above that would indicate that okay, it is on an upward journey and probably we have found a bottom, but until then nothing is for sure. So these levels that is seen in this charts is clearly mentioned here. We can have a look at that. So TEMA is number, gap is window gap, RN is rounding number, PSL is previous lows, Fib is Fibonacci, PR is previous resistance. So that's how we find supports and resistance on the charts. Same thing with the opponent resistance mentioned here. So we have to come to conclusion taking a better at these places according to how you correlate these two levels. That's two ways of understanding and find support resistances. Right. Let's move ahead and try to understand how the different sectoral indices have performed. So it is a remarkable recovery. You can obviously see that the IT recovered 1.3%, 8.6% dramatic recovery by the metal index, auto sector 2.5% recovery, pharma 2.8% recovery, FMCG 2.4% of recovery, and 2.5% of reality. So every index has bounced back, not just one or two index. But fact is, it is the downfall is so severe that the bearishness is still seen very much. It does not fully recover from the bear zones from the case of IT sector, auto sector, FMCG sector, and reality sector. So only the pharma and the metal that is still showing some sideways momentum at least. So that is something that so it has to come into at least sideways. Almost the majority of sectors does not happen. The majority of sectors are still in the bear zones, although the bounce has happened substantially last week for sure. IT sector was at the bottom of the trendline channel, and then probably that may be a zone of reversals with possibility that momentum was climbed back in sideways also. And the metal is also at the bottom of the trendline channel, a good recovery attempt and climb back with momentum sideways zones. Auto has a lot of space more to fall down towards the bottom of the channel at 18,300 levels. It's possibly very careful the slide down. Momentum is attempting to climb back to the sideways after having fallen to there. Nifty Pharma is also at the bottom of the trendline channel and attempting to climb back to the sideways. FMCG is at the bottom of the channel and there are chances that can reverse from there, but the momentum has still not succeeded in climbing back. So it's only the metal and the pharma. Metal, the bottom of these two, which sectors has at least successfully climbed back, and others are still struggling in the bear zones. Reality has a lot of space more for. So there is some danger in the auto and the reality for more space of downfall is possible. So basically all sectors were hit bad and it remains, majority of them remains in the bear zones. Now the index heavyweight stocks are contribute maximum. I mean that as you can see HDFC is showing a big red last week when the market was trying to recover. HDFC did not succeed. When the market was falling, HDFC supported. So it's contra. You can see that HDFC managing that sideways momentum, and Reliance has given a good bounce up after having hit the bottom almost near 1,150. So it is probably a good opportunity to put in some SIP for the investors. But the divergence, you can see the momentum has worked out and momentum has climbed in the sideways zone. So there is a potential that if the price moves above and this resistance in the midway below the 1,300 levels, if that is taken out, then there may be a support journey towards the 1,700 level. So Reliance seeing recovery, good recovery. SSI Bank also seems to have taken a bend at the RSI 40 level. So sideways overall, Reliance, ICICI Bank and the HDFC Bank. Right, so IT sector has got hit badly and continues to be so because the TCS will fall and bear zones not recovered, and the case being feeds in the sideways and falling. Kodak Bank and the corporate stocks is moving up and down within that range for a long time and continues to do that. ITC is in the bear zones. So let's see, there's a big heavyweight that's in trouble. Otherwise, it's all sideways. Heavyweight stocks sideways. Sectoral indices, most of them yet to recover from the bear zones. In the moment of medium term, we're talking about. Now, if you look at the mid cap and the small cap, it's still in the bear zones. Recovery attempt has happened in the mid cap and the small cap. Also, you can see the green candles certainly recover from the bottom of the channel. Any breach of that could be deadly. Right, items in bear zones is what we're keeping as bottom market recovered, but still, just like many majority sector analysis, bottom market is also the momentum bear zones in the medium term. Keep that in mind. Let's move ahead and try to understand what the institutional participation is talking about. It's selling by FIS. Once again, 15,500, but it's reduced. It was 25,500 last week of crores of selling in the cash market. So 50,500 selling again. Domestic issues purchase more, 20,000, 21,000 crores of buying in the cash market reserves. That's why the market is simply researching. Let long single derivatives from FIDs or more of last week. So that's the figure that is FIS continue to selling, pulling out the money. The dollar was rising up, so FIS makes more sense for them to invest in their home country than or in the other global markets than to invest in a country where the valuations are too high and dollar against rupee is too high, and so that what money is getting pulled out, and also it is taxed by the government, the FIS, such as like nowhere they vote. So some recovery can happen in the market only if the FIS come back and start buying, which has not happened yet, in spite of the fact that there is recovery attempt. That recovery attempt was nothing to do with the FIS because they continue to sell, which is why. Let's look at the global markets, currencies, and other commodities and all that. Dollar index, big fall. Look at this candle, white, rich, bearish candle. 3.5% is good for our economy. Emerging market economy doing good if the dollar is falling. And the current rupee also has slightly strengthened with a 0.5%, where the US dollar has fallen down 0.5%. It's at 87, still too high, but some gain has happened. Its momentum is still bullish, keep that in mind. So some of the gains and some dollar weakness is a good thing. And crude oil 4.2% down, 67 levels. So that is another big. The global cues are very good, but look at these two factors. The US market's in red, and the gold is making new all-time high with a 2% up, and then that's where the worry is. Crude oil is fallen down. It's very good thing, 67, which is very good for a emerging market, right? Rupee is gaining a little bit, is good. Dollar is weakening, is good, but look at this. Gold is rising up, and look at the US markets, big red candles and big pullbacks under the support. So it is fallen to sideways. Now Dow Jones, Nasdaq, S&P 500, all of them are showing big red and then sideways slip. That's not that great news. The US market is falling down and dollar is falling down. Will our market be able to gain for long? So if it stops here, that's fine. But if the slide down is going to continue, then it may eventually impact our markets as well. So that's about the global cues. Everything good, but except the global market is in trouble, and the US, except the US market is in trouble, and the gold is spiking up, giving us impressions that the private equity markets may further go down. So that's something you have to keep in mind, right? But some relief with respect to the dollar index and the rupee gains and the crude oil, right? Now two stock picks. These are for education purpose only, not for trading. Keep that in mind. Trading is purely your research and your findings, and you're doing nothing. You do not listen to what I say. This is for my study. I may or may not take the positions, and you may or may not take the your decision. So stock picks. One is the SRF Limited. SRF Limited is having a consolidation, very long consolidation since 2022. That's 3 years of consolidation. Seems to be ignored. If it works out, fine. Otherwise, have less surplus and get out. It's a long call, but the market is attempting to recover. Cholamandalam Finance is having a expanding wedge, and prices long way to go back to this new all-time high. Have tight stop losses here also, and volumes are good, momentum is good, and trend indicator also, ADX also showing good rising trend. So that's why two stock picks are taken. SRF Limited and Cholamandalam Finance as two stock picks that can be made on the long side, based on the reasons what I mentioned earlier. Now, this is a call ratio spread that completely protects you on the downside, and it gives it a simple risk reward. It's not completely hedged, and you have to get out at the moment it reaches the 23,000. And the reasoning is you are selling double of what you buy, and you do more of that OTM and for OTM. Price is at 22,600. You are taking an OTM to buy at 22,950, which is OTM, and for OTM 23,000 is sold twice. That's the strategy. Downside, whatever it falls, you will not make much money, but if it moves upside and does not move above the 23,000, you will make decent money, right? That's a range that you should. Good probability of profit of 91% also is there, and capital requirement is very less because it's hedged to some extent. So that's the Nifty weekly options call ratio spread strategy, right? With protection on the downside. Right? This again is only for education purpose and not recommendation of trade at any cost. Let's try to wrap it up. So market did attempt to recover after last several weeks of dips, and it is the it's the sixth month of continuous red that is happening. That's the first time in history, that second time or something, it's in history after 30 years that this is happening, and probably this month may bring in some cheer. And this may be the beginning of that. We don't know that. The market closed positive after a good recovery attempt, but Bank Nifty is not showing that much of enthusiasm. Correction is 16 to 16.4 after a remarkable rally of 72%. Bank Nifty is still not corrected too much, only 10%. So if you try to bucket all the different factors in favors, some of things that come in the bucket of bulls, but the bears outweigh the bears. But bears outweigh the bulls, I mean, right? So what's in favor of the bulls? So the candlesticks are bull because of the recovery attempt. For it. The case of Nifty, the Bank Nifty is not a great decision to deceive. Momentum was picked up, climbed back, attempt to the sideways can be clearly seen. Open interest is bullish, definitely about 1 and 1 PCR we're talking about. The dollar is falling, crude oil is also falling, is also positive for emerging market like ours. Bank Nifty showing more strength that does not completely breach the previous low. Yes, it breached, but not fully. It just retested that and climbed up immediately. So a good breach, more than 12% of correction has not happened in the Bank Nifty. So that's a positive thing. But if you consider the factors in favor of the bears are not, so continue to sell. US market is in red, gold is new highs, futures are showing negative zones in the Bank Nifty proper interest. The overall price action is still there, sectoral interests are hit bad, the side momentum is hit bad, it's a Nifty, it is still not recovered in the medium term. Trend is bearish on both the indices, on both time frames. Heavyweight stocks like this, they are all in the sideways. Broader market is still in the bear zones, mid cap. In small cap, we already seen that it has less than 20 expansion we have, less than 200 expansion we have. It's really far from that actually, right? So global tariffs and trade war is what is causing problems. What we'll have to assume fundamentally. So the volatility would increase because of things being talked about in the White House the other day. So you have to keep tight stop losses and don't take long positions until you get a confirmation of the charts at least. Technically, market is mildly bearish still. That's the view is all about. A good recovery attempt, correction is what is going on, 16%. Selling of the FIs is non-stop, regardless of what the domestic institutions are doing. The FIs continue to sell. If there has to stop somewhere, we'll have to wait for that, right? Another 2% fall or rate to stop this previous lows at 22 cannot be ruled out. It can happen any time. But obviously, the question is, will it sustain this kind of recovery action of last week? So, view remains mild bearish. It was moderate bearish last week, and this is mild bearish this week, right? So always keep in mind that technical levels and charts are all subject to whether it's a black swan or not. Major events like wars and pandemics and Russians, interest rates and Russians and all this, what can take out these technical levels all of a sudden. Nobody can stop that. So there are just probability zones that we're talking about. It's a probability. So it's better than betting on probability zones than blindly betting. Some criteria has to be there. That's what technical analysis is all about. Fundamental analysis is good, but you just can't be understanding the entire fundamentals of every company. It's a tedious task. Not only the very deep, learned or dedicated, huge humongous effort is required to do that. That's why technically we are analyzing. So according to the list, the levels for the next week is 21,000 to 23,000 for the Nifty and 47,000 and 50,000 for the Bank Nifty, and 26,000 and 54,000 for the hurdles before you can say this rally is back. It's a very long way. It's at 22, that's like 4,000 points away is where the Nifty is. So right, we are still in the correction, keep that in mind. So always hedge your positions and hedge your portfolio. The capital is all that you have. Trading is not about is all about risk management, not about gambling, right? Keep that in mind, and then protect your capital and hedge your positions, and then look at the playlist for the option strategies where you can make rental income as well as the market is falling. You can use cash or puts buy in stocks. You can invest at this time in small dips, in small SIPs, not in bulk, right? So investors can do that. Traders can also make money with the rental income using the option strategies. A lot of different ways. Check out the playlist. These are weekly analysis videos. And that's all I have for this week. And if you like the content, subscribe, like, and share, and then put in your feedback comments and all that. Thanks for watching. I'm also active in the other channels. Subscribe to that as well, especially the X. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.